So hi guys, today we'll be looking at how to trade the Gartley pattern and how to spot it on a chart. It's very easy to use only when you know how to use your Fibonacci retracement ratio. So we'll dive right straight into the chart. So what you need to know about this is there are different legs in which you need to calculate using the Fibonacci retracement ratio, which they are all starting from the X leg, A leg, B leg, C leg, and the D leg. So the first thing you should look out for is the price move up from this point to this, in which the first point is called the X leg, which is the starting point of a price move up. And at this point, we'll call this point the A leg. So looking at the X and the A leg, these two different legs, they don't have any Fibonacci retracement calculation. To get our B leg, we'll have to use our Fibonacci retracement level, in which from X leg to A leg, our B leg will come right down at the 0.618 ratio. Now if you notice, look at what I dropped here. This price must not close below the 0.618. we must have something like the wick that will cross the 0.618, but the body must not close below it. So when we have this, price can range between the 0.5 down to the 0.618, but must not close below the 0.618. So when we have this, we'll call it our B leg. Now the next step is to get the C leg. To get the C leg, we'll use our Fibonacci retracement ratio. We'll drag it from A leg down to the B leg, and the C leg will come right around the 0.618 up to the 0.786, but the body of the candle must not close above the 0.786. we can only get the wick that will just crossed above the 0.786. So when we have the body of the candle closes between this 0.618 and 0.786, then we'll have our C leg. Now take note of this. After getting your C leg, always look out for price that has double top. Now the most important part of this Gartley pattern is the double top must not be on the same level. The left top must be higher than the right top. If eventually this price moves up to get to the same level as the A leg, then that is not a Gartley pattern. So after we get our C leg, the next step is to get the final leg, which is the D leg. Now the D leg will now come in from B leg up to the C leg. Now at this point, we are going to use the extension ratios, which are 1.727 down to the 1.618. So we want to see price moving down within this 1.272 down to the 1.618, but must not close below the 1.618 or get to X. So we might see something like the body of the candle closes between the 1.272 down to 1.618. So we can see something like this. Then after this, we have our Gartley pattern. So you can use this, the XABCD pattern, from here, take it up to the A leg. From the A leg, we'll take it down to the B leg. From the B leg to the C leg. From the C leg down to the D leg. So when you have this, the next step is to do what? To find out at what point should you take your profit. At what point should you take your profit after you must have bought at this point? You take your Fibonacci retracement levels from A leg down to the X leg. So the first thing you should look out for is the B leg. When price touches the D leg, there is high probability that price will always bounce back to the B leg, which is at this point. So this should be the first point you should take your profit, which is this, followed by the 0.5 and 0.618. So these levels, 0.618, 0.5 and 0.382, those are the levels to look out for whenever you've bought any particular coin at this level. So you should be looking at buying any coin after spotting this Gartley pattern. Just buying any coin within this level, but must not be at the X leg. So when you get any pattern like this, just make sure you set your stop loss right at the X leg. So let's take an example of a chart in which I want to show you, which is the IOTA BTC pair. So I'm going to use the same calculation here so that you can see it. The first thing we want to look at is the X and the A leg. From here up to this place. Now take note of those ratios. This is the X leg to the A leg, which is normal price move up. Now from the X leg, taking it right from the week, we have the B here. So we have the X leg here, followed by the A leg. Then after that we have the B leg. Like I said, the B leg, the body of the candle must not come or close below the 0.618, just what you're seeing here. You can see the wick crossed the 0.618, but the body of the candle did not cross, so this B leg is valid. Now we need to look for the C leg. Now to look for the C leg, we have from A down to the B leg. Now from A down to the B leg, we have price moving from this point to this point. Like I said, price should not close above the 0.786, but it should range within the 0.618 up to the 0.786. So at this point we have our C leg. Now for the last leg, which it is yet to be completed, and we're looking out for that. You take your Fibonacci retracement ratio from the B leg up to the C leg. Now you should expect price to bottom right at the 1.272 down to 1.618, but it must not get down to the X leg, which is this price. So we should expect price dropping down from this place to this place, which is within this range down to this place, and we call that the D leg. So after this, you can use the XABCD pattern to draw it out, which is from here to the A leg, B leg, C leg, and the D leg. Now after this, you can now take a position. You can now take a position right at the D leg, but make sure you use your stop loss, which the price must not go down to the X leg. So now if you flip everything from the A leg down to the X leg, the first target you should be looking out for is price going back to the 0.382. That's the first target, and the second target should be the 0.5, and lastly 0.618. Make sure that price moving downward to the X leg should be completed before you take any position. That is the most important part of this. So if price has gotten to the D leg, then you can now take a position with your stop loss. So I hope all of you fully understand this. If you have any question, you can drop in the comments below and I'll reply you. Thank you very much. I will expect more chats coming.